All right, so we're recording. So we're just gonna do a little lesson of the strat reversal candles and whatnot. So you basically have three types of candles on the market. There's no, you can only have three candles, the three types of candles, and that's it. There's only those three types of candles compared to the last candle that you had, right? So if you see an inside candle is a consolidation tightening of range, meaning that it's price compression. At number two candle is a directional up or down, that it breaks the other candles, when it breaks one extreme of the prior candle. And at three candle, it's an engulfing candle that takes out both of the sides, right? That you have. So you do have some kind of setups when you have a combination of both. You know, when you have combination of both, you're gonna have some kind of setups. And I think one of the most powerful is whenever you start having like a number three with a two number ones, right? With a price, it shows that it had a big expansion, an outside candle, and two candles are inside. So we'll get an example right here. Um, all right, fucking eBay, come on. What was your? This is not what I was looking for. All right, now keeping a small position in there. Very, very small. Like I even went even smaller right there. All right. So let's run for some examples. I'm staying on Dow only right now. That was the only play that I have. It made a retracement. It didn't go back up to the highs right here. It's a good example right there. It's a good example of the use of the fib. So of an intraday move, right? 5 minute move right here did not go up at the 50% retracement. That places, at least a 10% extension break up to here. That was a good entry right here for the short. But obviously, I took the break of the inside candle. You still gotta look intraday to see what you're going and see what's happening, right? Um, yeah, let's see. It's a little bit of a live example. See if we do get, so this is basically, I mean, if this trap reversal is gonna materialize, if we do have a acceptance below 56, then you can place your you're gonna go down to the hourly or 15 minute. Let's go 15 minute actually, and see where the next supports are at, right? So this candle topping right here, highs right here, there's like a void of price action. So I would expect some kind of um, a drop right here if that breaks. That's why I kind of took the trade. And below that, you can expect this kind of lows right here, and this lows right here. You know, so we'll see. Hopefully, we get this trade green. Anyway, sorry for rambling in the middle of a lesson. Um, so yeah, let's look at some examples on this chart right here. Dow, Dow, Dow. All right. So let me do a new drawing set. All right. So let's look at the three candles that we have, right? Three candles. Number one, it's an inside candle. Number two, it's a candle that breaks one extreme, and number three is a candle that breaks both extremes, right? And let's look at it this way, right? This is a good example. So this is your previous candle from this action, right? So what do you classify this candle right here? This one took out the highs. This one took out the lows. So what do you have right here? This candle is a number three. Full party is it's gonna answer. That's a number three. Yes, and then go for number three. So you're taking out two extremes, right? Um, it's a bullish engulfing, but some people will go straight up buy this. I don't. I think it's better to have something after it, see what's gonna happen after the engulfing candle. But what you see right here, it's now that you have this range. This is now your if you're walking into the next day. What do you have right here? This one doesn't take out the neither the tops or the lows. What do you have here? It's a number one candle. Full party's got it. Full party, yes sir. An inside candle. I'm actually gonna let you answer. Um, what do you have now? It's a new candle which is inside, but this is your previous candle. Alexa, dismiss. What do you have next? This one doesn't take out the highs. This one doesn't take out the lows. Another. So I like people that answer. Actually, I love it. Another inside. So you count the wicks. You count the wicks because the wick didn't take out this wick low. This wick didn't take out this wick low. You take the whole range. I mean the you have to remember. I don't know why people wouldn't count wicks on anything. It's just wicks in candles is price action. It's price action. That's um, you know, it's the price travel at some point to the wicks, even though it closes. Candle closes and opens are important, but you have to count the wicks at all times. It's price action. You know. Um, it is considered as a doji whenever you have a like indecision candle. But what I want you to focus on why this setup is very powerful is because you have a price compression, and this is good enough price compression, But having it another price compression right here, this means that this is gearing up for a larger move, a larger move because you can actually think of it like it's like if you were to look in at a what's it called a triangle, a flag, kind of like what you were drawing the other day, Cal. A little flag right here. You know, we're up 7% on Dow. Finally, that was a bad entry, but we'll see. We'll see if it plays out to this low right here. Um, So yeah, price compression, it doesn't equal a flag, because you can actually have price compression that kind of looks like this instead, which is a descending triangle, right? This is price compression as well, but it's just getting tighter, 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 and then once you have a price expansion, which takes a move higher, that's where you want to be on the expansion, right? You don't want to be on the compression, you want to be on the expansion. That's where the volatility is. So So yeah, what you have right here is what happens next is once you take out this high, you're basically expanding the price from having compressed right here to an expansion that takes out this high, and it makes a new high. So it's up to levels that you're gonna be drawing to the left. Fit retracements and whatnot. That's where or managing the trade, moving stops and whatnot, right? But this is where you wanna be at the price expansion after having a lot of price compression. So it's a very good example, right? So now, what is this candle? What is this candle right here? Now that you have taken out this candle highs, but did not take this candle low, right here. If somebody can answer, it's not a hammer. It's a number two. What I want you to go back a little bit is to this little slide right here. Remember that just remember there's only three type of candles. I'm not looking at the shape or form. I'm looking at the look. This is more like location, right? What is the candle type and location? Because if you look at the market, you can only have those three type of candles. Only three. There's no more. There's no difference. And this is where I like the simplicity of it, right? Only three candles, and that's what you go for. Um, so this is recorded, and I'll make even a more detailed video. But this is an intraday lesson that's gonna be recorded regardless. Um, so yeah, your entry is you have to assess your entry, right? Like I'll give you an example right here of this inside candle break. I took a bad entry, but it's just I'll tell you sometimes those inside candle breaks. So this is the low of the prior day right here. This is the low. So the inside candle broke to the downside, right? It gave a little bit of a gains right here, but you also have to assess that this move is extended, right? So I did not, I took a chance, that this was going to have continuation lower straight up right here, straight down right here, right? So I'm sorry, did this reach any of the targets? Not yet, but it's at that area. It has at this little void of price action. But anyway, so you do get an entry, right? I mean that it breaks the low, but sometimes it goes straight down. Sometimes it'll go. It depends on how. I think I should have, well, on this play I should have seen that the compression was not that tight. Whenever your inside candle is very very small, it means that the compression got very tight the prior day, and the expansion make a very nice expansion off of the break. Right now, what you would want, you take it broke. What I should have done right here is take a little bit of a breather, get a little bit of the euphoria, going on, because I mean, probably the caffeine, the euphoria from pre-market, because I made 5,000. Well, I gave back $1,000, but I made $5,000 on pre-market, and then I started trading a little bit erratic, right? So, um, I actually need to walk this off. Even a big loss and a big win, you need to walk it off, because it just it gets a little bit messy on your head. Anyway, um, you're gonna take your last move retracement. You only know that this is the retracement to go for until you have placed a green candle highs right here. You know, yeah. So you only gonna be able to anchor to the highs right here and to the lows after you have placed a green candle. That's for sure. So your aim is gonna be that you're gonna continue lower. So we got that going on, and your entries are gonna be basically around the 50% retracement or the 618. Which if I had been patient on the trade, I would have got that 50% retracement entry and a nice drop and some nice gains. Right now it's only up 10%, 8%, instead of being up 20% or so. Had taken a good entry right there. Uh, so you got the break, but you're patient on the entry, and that's when you get the gains. This is in hindsight, obviously. I mean, I took the chance, but this is where you still do the favorite retracements to know if you should be on the trade or not, right? Uh, because at this highs, you know, you're wrong on the trade, right? Because it just, this leg down didn't have any more on it, so it's just probably not gonna be. It was a false break to the downside, on the inside candle at the all in all, right? Um, So yeah, I mean, sometimes taking the break of the inside candle as soon as it breaks, and let's actually go back on time and look at this double inside candle that broke. I believe golfing inside is this one right here. So look at this right here. This is the double inside candle, right? This is the one of the insides. No, was it? Hold on. What day is this? This is the inside candle. This is on 228. All right, let's go down to 5 minutes. Give me 30 days. 228. 27, 28. Yeah, this is the inside candle lows on that one, and then this is the other inside candle lows on this one, right here, right? So we have the inside candle. This is the first inside candle. This is the second inside candle on the daily. If you had taken the break of the inside candle, I think we did this trade, right? Was it? I think we did this trade actually. Um, it looks very familiar. So if you take the break of the inside candle right here, I mean, it immediately goes, right? So I mean, sometimes it'll that's your entry, right? Just break of it, go and actually retrace a little bit. And if you look at probably on the 1 minute, uh, actually not gonna go on the 1 minute, just gonna do a retracement right here, because you had this move higher, you had this punch right here. In the 1 minute, it went back down to the 50% retracement, and it went right. So that's probably your entry right there on the 1 minute. But I mean, you can get the entry right here, be wrong for a little bit right here, and then uh, actually go higher, and we're up 20%, guys. So bad entry, but the play I'm not too bad of a day if this play works out very well. But yeah, the entry was right here, and you're gonna be wrong. You still do your fit retracements because you're gonna be wrong if it trades back down over here, right? Um, because the opening range gives you like the 50% retracement drop, and then punches it forward, so it shouldn't go below the 618, right? So that's working out right now. Inside candle break to the downside. We're at the first target right here. First target. I'm gonna trim some off. Actually, I believe it's the first target, right? Let me see. Yeah, first target right here, as we notice, as we pointed out of because of this 15-minute candle highs right here. Nice gains at 20%. All right. Sorry. Finally, some gains today on options. Let's see. We're gonna aim for the second target. All right. So is that clear? Is that clear? So you're gonna, if you notice, I mean, the using the strat reversal, so as a lesson right here, right? Where is it? Right here, as a lesson, right? So if you notice that this is looking at the inside candles, right? And where's the setup right here? Uh, mm, One bar, inside, outside. No, I don't see it right here. I guess it's not here because it's only about the combos. But I mean, it's something like this, right? Where the inside two up, one down, two down strat reversal. So this is not a bearish continuation, not a reversal. So basically that, right? Basically that. Um, is that clear? Any questions? Basically that, right? So we have this. So it's a two down. It's a one candle, and the next one is a two down. So I mean, you still have to combine this with your fade retracements, intra levels, all that, right? Because you don't formulate the trade just based on the little formation that you have right here. It's just not enough, right? It's just not enough. I mean, it'll be very simple to actually, okay, you have a staircase up, you break the first candle, and boom, you take it down like that, right? It's just there's gonna be it's gonna travel there, a little bit troublesome, up and down here and there, it's just to give you an insight, think of it psychologically. Think of it psychologically. It's this is pure, the candle formations is pure psychology. So you have something that's been going up, 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 up. First profit takers show up, and it starts selling as a cascade. It's first, same thing on the other side, right? First spreads, people start taking profits, and it's a run for the exit. And it becomes a short squeeze. So it's just psychologically speaking, it's just location and whatnot, right? And you also combine this with, like, where are you on the EMAs? Are you rejecting the highs with a 50 EMA, a 20 EMA? Is this on a downtrend? All the stuff, right? You combine all that stuff to pull the trade off. You know, um, I'll give you an example of the Netflix trade. You know, I attempted this because I see an overextension. It's not a place for me to short whenever I think the price is extended, even though this trade didn't work. I'll tell you what, I'll take this trade again if I see it. But it just didn't work, and I'll cut my losses, I'll lick the wounds and move on, right? But yeah, the what you gonna call it, the intention sometimes is a reversion to the mean. Sometimes you get a reversion to the mean, but you have to know where your location is at, right? I think, for future references, we're gonna focus more on longs that are above the moving averages, and shorts that are below the moving average, instead of looking for a reversion to the mean. I just to place the odds on our favor a little more. 30% on Dow, finally. Some good gains. Let's see, are we on a level? Not yet. We are. I'm gonna take this as a level. You know, adjusting this 15-minute candle highs as a level. Let's see. I'm gonna trim some right here. 30%. The mid price is 51. I'm gonna try to get fill 53. I'll take a. I'll try to take a 52. Felt that at 52. 30% profits right there. Um, all right. So I was good. We'll see if we reach any more targets other than this. This is displayed out nicely. We'll see. Um, we'll see what happens. The market is turning a little bit bearish at the moment. I'll just right here, you'll notice that unweighted sectors are more bearish than anything else. Weighted sectors are not that bearish, so shorting large caps right now is not gonna be as profitable as shorting, let's say, materials or uh, or staples, that are red right now. Shorting staples and shorting materials are probably the way to go today. And the real estate sector is just joining the downside right now. Did you get to open the link that I sent you for the scanner and the combos and all that? Want to make sure that it works. All right. Nice. Yeah, sometimes you have to reload it. I mean, if you notice, it's an Excel sheet. Well, not an Excel sheet, but what do you call those spreadsheets on Google Docs, I believe. And those boxes they have code in them that take the the daily candles closing prices and opening prices to formulate this reversal. So it's a scanner, but you still have to make your own assessment. I mean, what are you looking at on that and all that. I hope that makes sense. Um, yeah, just to give you a little rundown on the scanner. This is one of my favorite ones. You do have the like a little strat combos right here, just to give you a little guide. Once you get familiar with it, you're not gonna visit this page anymore. Just understand what the three candles are and what the importance of taking out a candle highs or candle lows after being in a certain direction, and then you're gonna combine it where are you on the charts on the EMAs, and where are you on the charts with what's the market conditions, fit retracements, all that. You put it all together and you formulate a trade. Now, when you go to the daily news bullish, this scanner only works, by the way. You cannot run the scan. You can run the scan right now, but it's gonna tell you about what happened yesterday. Now it's gonna tell you. It's not gonna tell you anything intraday. If you notice, there's no changes intraday. I'll like give it an hour or two after the market close, and you'll have new setups, right? So you'll have a ton of inside candles. Then you're gonna have a ton of strat reversals, stuff like that, right? Um, you're gonna align it with to see if the sector has time frame continuity, because the strat goes a little further than just having a daily candles positioning and whatnot, right? But you have some if you notice, like if the sector is aligned with the type of candle that you have, it's gonna be color coded, right here on the scanner. So it means that you have time a confluence with the sector, and if there's time frame continuity, it'll let you know right there on the sector, right? The time frame continuity is down on the daily, on the weekly, up on the monthly, down on the quarterly, down on the yearly, on energy, right? So you'll see if you have some confluence on time frame continuity, right? If the week is red, or the daily is red, or the monthly is red, and all that. So a lot to see on the scanner. A lot to see on the scanner. Uh, Let's see if one of them played out. Let's say AAL was one. You got an inside candle that broke to the upside. There was a trade to have taken to the upside right here. You know, once it opened, it broke the highs. Could have taken long and enjoy some upside. Does that mean that it's gonna? I mean, there was an inside candle right here, and if you go down to the scanner, this is inside our prior day range. Is this? This is inside. Did not take out any extremes. It opens, take out the strings, and you can take it higher. And if you go down to the scanner, you'll notice that well, you don't have a continuity on the sector right there. AAL didn't have continuity on the sector. There was a double inside candle on. I missed that on T-Mobile. Oh, it's still inside. This hasn't broken, guys. Look at this price compression right here. T minus is gonna T-Mobile is gonna move up a lot on the break of the look. If it breaks to the upside, it's gonna end up breaking a daily 20 MA. So gonna put an alert right here. If it breaks to the upside, it's gonna break the daily 20 MA and blast to the upside. Hopefully, it stays as another inside candle, because the break of it on Friday is gonna be pretty nice, guys. Pretty nice. Hopefully, it stays as an inside. And let's look at it on the 15-minute. So had a major move to the downside. It's not having continuation lower. It's rejected the 618, so this could be a potential entry for short. I mean, if this daily, you can construct it as a staircase up, kind of like a bear flag that is still defending this trend line. But if it breaks, then it's gonna be a major break to the downside, right? Which is coming off of a double as of this moment, triple inside candle, right, on the daily. Hopefully this stays below the daily 20, has a break to the downside, and we can take it down. That would be a very, very. This is below the EMA, so we'll see. We'll see what happens, right? So yeah. That's basically it. That's basically on the STRAT candles. Does any Calv is asking, will Goog at the moment be considered as price compression? Let me see. Goog. Don't we trade Google instead? Yeah. If you notice, there's making a base. It doesn't have an inside candle. It has like it does have a shooting star that is not at the high. So this is not, even though it's a bearish candle, it's not constructed as one because it's about the daily 20 and it's not at the highs. So as of this moment, this price action is above the daily 20, and that's bullish. It's trying to hold the daily 20 right here at the highs. I mean at the lows. I'm sorry. And if Google was to break higher off of this daily 20, you can actually construct this daily range, opening range, I'm sorry, to see if it's trying to hold right now at 50% retracement. Doesn't look like it's doing a very good job at it. May go down to a 618, and then it can go higher, right? This is a price compression on the daily right here, because there's no direction, just number 2 candles to the downside or number 2 candle to the upside. At the moment inside, currently based at the daily 20, so it's a reclaim of the daily 20 after having rejected right here. So this is bullish, this is bullish. I think it's rejecting. No, it's about the 620 of this last leg down. So this is making a base right here. This will be interesting on the upcoming days. Compressing at the moment because of this daily sideways, right? Going sideways is price compression, and then you'll have some kind of expansion to the upside or to the downside. It's just you don't know when the range is gonna break. But it looks interesting. Looks very interesting. I mean, you can find inside candles. I actually have some scanners right here on TOS. I use that one because I like it a lot. I like this scanner a lot because this one has a ton of information on the sectors, time frame continuity right here. It tells you if there's a combo right here. You know, two down, two up, two down, two down, one up, one inside. I'm sorry, two down, one inside on a green month. You know, and construct this as in you know, this is on the bullish side on the daily, but it doesn't have to be bullish. You know, you can actually have a it can be on the other side. Let's say like I can tell you right now that possibly uh, Philip Morris, which is in the scanner right here, has a confluence with the sector, and it's an inside candle, and it most likely broke to the downside. Let's look at it right now. It actually broke to the upside. Let me see. It is not going up, but it had a break to the upside at the open. It opened very high up. Feel the This is actually very bearish. A failure inside candle break to the upside. Then it's declining all this. Looks good for a short, in fact. And I can tell you, I mean, this is red on the day. And tell you it's red because it's part of the XLP, and XLP, it's is red at the moment. It's not having a good day today. So it had a break of the inside candle to the upside, but the problem is that it opened already high up. It already opened at target. You know, this is not trade for you to take, even though it opens on a break of the inside candle to the upside. You know, but yeah, just going off the scanner, you know, it was an inside candle, and that's why you still have to take assessment of what you're looking at on the trade, right? Dow at the moment, that was a nice exit. That's why you have to recognize those levels right here. This one right here, you know, this topping 15 minute, this is 5 minutes, but in the 15-minute candles, you'll see it topping right here. Good level to have taken profits. I think you can construct this move down right here, and notice that it's rejecting the 32 retracement. It might go to the 50 or the 618 and probably back down. We'll see. Once it goes above this level, it goes about the prior day range again, about the 618 of the last push lower, and I would think the trend has already been over on the Dow for the day, right? Not on the Dow, on Dow Chemicals. Let's see if we can get towards this lows. I don't know. Maybe it trends down all day. Who's to say? I guess that is it for the lesson, I believe. Where are you? That is it for the lesson. Yeah, any questions before I stop the recording? So, I mean, that way we can clear everything now about the strat combos, the location of the candles. We'll get more in depth about the EMAs. I mean, it's very simple, guys. It's very, very simple. You guys have probably know already what I think about EMAs and whatnot, and also the favorite retracements, right? It's also very simple topic, but we'll go into depth on another time. And beautiful drop, Dow. Beautiful drop. But if there's any questions regardless of the strat, you know, this is when and now. I'm pretty sure you got a very clear pool party. I like your name, pool party. Any questions, Kevin, Jolts, Cal? None whatsoever. Let's stop in the recording and